All right. Can y'all hear me okay? Give me thumbs up or nod of the head. All right, cool. I see some of the faces on here every time, which is kind of exciting and at the same time super disappointing because we should have literally 1,000, 1,500, 2,000 agents on here. And for me, it's annuities changed the game in the industry. They changed the way I viewed this business. They helped me. They helped me buy an office. They helped me build a team. They helped me pay for staff. They helped me with chargebacks. They helped me all the way around the board. So if you're not selling annuities, please just start asking the golden question. And if y'all could do me a favor and pick up your phone and shoot a text out to your team members and go, hey, y'all should be on this. Because if you're not, you're leaving money on the table. And I don't know about y'all. I didn't do this to not make money. Like I like helping people. Don't get it twisted. I was here to make money because I was broke. Um, so Sorry, I got ADHD crazy and my phone's going nuts. Um, that being said, we're going to get started here, um, and we'll roll through. I'll try to keep it pretty quick, and I may open it up for some questions at the end. But let me share my screen. I'm going to roll through this because we haven't done it in a while. We have a slideshow. Can y'all see my screen? Can you drop a one in the comments if you do? Let's see. Yes, perfect. Thank you. All right, so here at FFL, we sell fixed index annuities, which abbreviated FIAs. There are a few different types of annuities that a lot of times when we're talking to clients about, they'll give like bad feedback on. Most of the bad feedback you get on annuities is from variable annuities. Um, Fixed annuities are kind of like bank CDs. They're not great. They're not awful. You ain't gonna lose money, but you're certainly not gonna make any money. Um, but people complain about variable annuities because they lose money. Workplace annuities are another type of deal that people don't really like for the simple fact that when you turn a workplace annuity on, if you live for 3 months and you drop dead, that money's gone. It just stays in the workplace pool. So it's almost like a pension. Um, so it's not really your money. It doesn't get passed on to your beneficiaries. Variable annuities also lose money. So if the market's doing well, you're going to make money. But if the market's doing bad, you're going to lose money. There are fees involved. We at FFL only sell FIAs. Okay. So y'all don't need a separate license for it. You don't need to have any special trainings other than obviously what the carriers require you to have in order for you to offer the products. Athene has a couple of different things that you need to be aware of. Um, but they're very simple. Here are a few, not all, just a few benefits to FIAs. Principal protection. It protects your money against market risk. That is the biggest fear of people nowadays is not trusting what's going on in the economy, not wanting to lose money, not wanting to have to wake up every day and be in fear of what's going on with the market. And that is a very real thing. Like I watched my dad do this when he retired, and he would get up every morning and turn on the news and watch the stock tickers at the bottom. I'm like, dude, you're why? Like seriously? Like for I just never cared that much about anything, like to have it like absorb my mind that much. But I'm like, dude, that can't be. It can't be healthy. I guess I understand you not wanting to run out of money, but this isn't the solution. You getting up every morning and then freaking out if it's bad and doing cartwheels if it's good. It can't be good for your health. So, principal protection is a big fear. The biggest fear of seniors is running out of money, not dying, just running out of money. So they'd rather die than run out of money. Is kind of what I'm thinking. So it's a huge deal. Tax deferral. So you can take a 401k, roll it into an annuity, you'll be tax deferred. You can take straight up cash, put it into an annuity. The capital gains are tax deferred, which is unique to an annuity. Growth potential tied to the market index, which means essentially when the market's up, you're going to get to take advantage of some of those gains. That's very simple. Guaranteed lifetime income options. Again, for seniors, running out of money is their biggest fear. You can guarantee they never run out of money if you put them in an income product. It will pay them till the day they die. Whether they're out of money or not, it's going to continue to pay them monthly, just like Social Security would. Legacy planning avoids probate, which is, again, in certain areas, certain states, really, really a big deal. Um, Potential premium bonuses. Some of the products we have offer bonuses, which are helpful. Sometimes people have, now might be down 4, 5, 6%. You can put them into a plan that has a 12, 13, 14, 15% bonus. So instead of them being down 8, 9, 10%, they're in the positive 6, 7% if you get a big enough bonus. So we can help you with all um, product suggestions through our Ask a Specialist platform, which we'll go over a little bit later. Obviously, there's 10,000 Americans every day that retire. That's 10,000 people that you could potentially be talking to about moving their money out of their Roth, out of their IRA, out of their 401k, out of their 403b, into something that is safe and secure that will guarantee them to have money a lot longer, if, in most cases, than it being in a market, but potentially for the rest of our life if we select a product like that. Different types of money you can roll. And again, this is some of them. It's not all of them. It's to get people to start thinking. You got your 401ks, your 403bs, your IRAs, your Roth IRAs. You got cash. People have cash. TSP, CD, savings, inheritance, and settlements. Those are some of the things that if you ever talking to a client and you hear any of this, like you should be asking what you have like that acts like life insurance, IRA, 401k, 403b. That those first three you should be asking. TSP. But if you happen in conversation to hear them say something like, "Oh, well, I have a CD. I don't need final expense insurance. I have a CD with $15,000 in it." That should perk your ears up. Um, because all of these things can be moved into a fixed index annuity, and not say that the annuity is going to perform better than a 401k or a 403b. I'm not saying that. I'm saying when you get to the age of retirement, you're no longer putting money into an account. So when the market goes backwards, when you're working and you're still putting 5, 7, 8% into it every month, then that balance is going up. Plus, you're buying more stock. So when the price adjusts and the market goes back up, you're getting paid on more stock, which is why you can recover a little bit quicker when you're still working. But when you retire, your working capital is done. So you're not putting anything else into this retirement account, 401k, 403b, TSP. So when you take a hit, you're strictly waiting on the market to correct itself before you get that money back. So it's 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 so important to understand where people have concerns and fears, and then how to present an option to them that makes them feel safe and secure. Because the biggest deal with people is they want to feel secure, especially women. Like they want to feel secure. Um, and then you got men that want to make sure their women feel secure. Like I watched my dad, and his whole deal was like, I'm not worried about me. I'm worried about your mother. If something happens to me, is she going to be okay? So in general, it's just they want to feel secure. But these are the different types of accounts that you can look at potentially rolling. Ideal client, I don't know why I did this, but I'm going to go through it quickly. It's not, it shouldn't be ideal. This is a type of client. Anybody that's 59 and a half years of age or older is easier to get done because most 401ks can be transferred with penalty free from any job if they're above the age of 59 and a half. So if you got people above the age of 59 and a half, it's definitely make sure you're asking the golden question. But it doesn't mean you can't do someone under 59 and a half, because you certainly can. Anybody that has an old 401k that might have worked somewhere for 20 years left and then now is somewhere else but is only 52, you can move that old 401k. So I don't want you to think this is the only type of person we can help. Anyone with a retirement account from a different previous job, a person that received an inheritance or a lump sum of money through a settlement, through, I don't know, maybe you hit it big at the casino and you walked away with 50 grand. I don't know. Someone that has the ability to do what's called an in-service distribution. So the 59 and a half year olds can take money from their 401k because that's how it was set up. They're getting close to retirement age. They want to allow these folks to start sheltering their money so they don't have to deal with market risk. Some companies, some 401k plans, 403b plans, TSP plans, allow their employees to do in-service distributions when they're younger than 59 and a half. So some of them may go, you can take up to 50% of your money and transfer it into another qualified account if you don't want to keep it here. Not very many do it, but some do. And it's always worth, for me, it was always worth it to just ask. I mean, what's the worst they're going to say? No. Okay, next. But if they say yes, someone has a $500,000 and they can move 50% of it. Hell, that's a $250,000 annuity. At the lowest comp, that's five. That's 20. I'm sorry, 5% of 25,000 is, or 250,000 is $12,500. That's the lowest comp, and it's a little more than that because it's five and a quarter. I love $12,000 commissions getting deposited in my account. Like, it's exciting. Okay, and then last one would be a person, per anybody with a significant cash savings, which again you don't see a whole lot of unless around a bunch of Italian people. Um, People don't really save cash. It just doesn't make sense to, because your money is not working for you. So this is how you find clients. Okay, this is how we've been doing it since day one, and it hasn't changed because it doesn't need to change. It works, and when something works, you don't need to change it. Does everybody know what this is? What this sheet is? Okay, I see some shaking their head yes, some shaking their head no. This is what we call our financial inventory sheet or client worksheet. There's a bunch of different names. They all say the same stuff. This is what we give to new agents and seasoned agents. Like, I used this in every appointment the whole time I was selling life insurance, which was 10 years, 11 years. I asked every single question that was on this sheet every time I was sat with a client, because A, you're gathering this information anyway. So when you have a sheet, like I have a sheet, when I was face to face, I'd go, they're like, why are you asking me all the questions? I'd go, well, because it's on the sheet. I have to fill out the sheet. If I'm on the phone, they go, why are you asking me all these questions? Well, because I have a suitability form I'm filling out. Like, I can send you a copy of it, but it's required. That makes it required, which means it falls off of you, which makes it easier for you to ask people for information that you're probably uncomfortable in asking. So if you don't have a copy of this client intake sheet or SRS inventory sheet or client worksheet, email me. Let me type. Can someone type my email address in the comments so I can keep moving and not get too far off track? Oh, I just see that. But it's very simple. I mean, you ask all these questions, which you should be asking anyway. Um, do you pay any extra towards your, even if I'm selling final expense, I'm asking them if they have a mortgage. If they have a mortgage, I'm asking them if they pay any extra towards their mortgage. I ask them if they have life insurance, yes or no. Who will be the beneficiary? It's an important question. Are you a saver or a spender? That's the silver question. Do you have anything else? See the yellow star right here? That's the golden question. What just happened there? Oh, do you have anything else in place that acts like life insurance, such as 401k, IRA, Roth IRA, stocks, bonds, mutual funds? There's a whole list of them: pension plans, CDs, annuities, significant savings. You ask this in every single appointment. I guarantee it. I mean, I guarantee it. One or two out of every 10 people you speak to will answer yes, and then also might move forward with you being able to present them something different. Like, 2 out of 10, without a shadow of a doubt, every day, all day, ask the question and you'll find people. This is more of the silver question. Listen, I'm trying to get people to ask the golden question. Like, I'm not asking for too much. Like, just ask the golden question. We can get the silver question when FFL starts doing $1 billion a year in annuity volume. But until then, like, can we just do the golden question? It's better than silver anyway. How do you find clients? Here's a video on how to go over the SRS or the client intake sheet. It's really simple. Like I'm not like you don't even need to watch the video. Like you ask the questions. Like somebody had this, and I'm going to take it out of there because it really does make no sense. I was like, oh, I can shoot a video on how to fill out the form. I'm like, what do you mean? Like it's if you can't fill this out, you probably didn't even pass the insurance exam, so you would have no reason for this. Like it's literally Q&A. What is your name? Oh, that was pretty simple. How old? Jamie, how old are you? What's your occupation? Seems pretty simple so far. Do you take any medication? Nope. Are you a smoker? Nope. Okay, we're good. Any surgeries? Nope. Okay, let's keep going. Anybody having issues with this so far? No, seems pretty simple to me. So anyway, it's just ask everything on here. You guys will roll through this, and if you make this a habit, and again, when I tell you I asked all these questions every single appointment, it's because it just became a habit. At the end, I didn't need the sheet. Like I could go down the whole sheet without looking at it because I just asked them so many times. You ask the same questions in every appointment, and then it becomes a habit to you, and that becomes really easy. So, guys, I'll get you this sheet if you don't have one. We don't need that. Okay. So this chart is I used to have this stapled onto the back or stapled taped to the back of my laptop so that when I was sitting across the table from people, they would see this. And I just wanted them to ask me, like, what is this? Right. Because it was like, you ask, now I'm in. Um, and I don't know how y'all do this virtually, so you probably don't, but this is the last 10 years, like straight up S&P 500. If you had your money in the market in the S&P 500 versus the PE 10 with a theme. Okay. 2005 to 20, well, it's actually what? Just the last 20 years? P10. Oh, last 23 years. Sorry. So if you look at 2005 all the way up to 2023, you could see the downs and ups in the markets in what the heck in the S&P. And the S&P is a very safe fund. It doesn't go down a ton. It's usually never down. It's never been down in the history more than 2 years in a row. It because it's the top 500 companies in the country, right? And the bottom few will interchange every year when some fall out, some stand. But the top ones, they ain't going nowhere. They're in, and they're typically doing well. Like Amazon's not doing good. Like they just keep doing better every single year. And I see more trucks, and every day I get more packages delivered to my house. I know Amazon's doing good, which is why this is so stable, and not you don't see the steep drops too often. Okay, but if you look, every time one of these goes down, this just stays the same or goes up a little bit because some funds in the annuities do better when the market's doing worse. And then it peaks, and then this one drops, and it stays the same. This line is a fixed indexed annuity. This is how it works. And in 23 years, you can see the spread over the last 23 years. Which one performed better? I can see which one performed better. Now, that's not always going to be the case, but it has been over the last 23 years. So, pretty simple to me. This is how an indexed annuity works. It's the same thing we just looked at. When the market goes up, you make money. When the market goes down, which is the red dotted line, our airbag pops out, protects your money, and it just goes over, stays level. When the market starts to go up again, you're going to make money. I'm sorry. I like to click buttons because, again, I got ADHD, and every time I click a button, it changes the screen. When it starts to go down again, your money stays the same, goes up, you go up. When it goes down, you stay the same. When it goes up, you go up. When it goes down, you stay the same. Like, does anybody see a pattern here? It's like a set of steps. So you're either going up or you're just standing still, up or standing still. This is how I pitched every single annuity I've ever written. Like, I drew this on here, this with some, like, I don't know, what's it called? Canva or some crap. But if I could have used my handwriting, like this is, I drew this on every single sheet. I'd go a line up and I'd go a line down. I draw a circle and I would go over. I'd like, this is the airbag. It saves your money. Like the airbag saves your life in a car accident. Airbag saves your money in an annuity. And people like it because it's simple. Like I'm not, like some of y'all know me. I don't speak like I'm some financial guru. Like I speak like I'm half dumb because I don't want people to think that these things are that complicated and they need to know so much in order for them to work. No, I tell people I've been selling them for 15 years. I help a lot of people protect their retirement. I did put my father in the same type of plan you have. I can explain to you how it works easier than anybody ever will. That was my call to fame. I wanted to be able to explain things to people simpler and better than anybody else could because people like simple. They don't like complicated. So learn simple ways to explain stuff and you'll have an easy time selling. I don't even know what this is, a little bit old, so I didn't look at it before we did this. Leads at agentcrmcenter.com. Manage your clients and leads automatically. Oh, okay, so this is a CRM we use, um, and it sends out text messages. So if you close a client, you put them in there, it'll send a message out to your clients after you close them and go, hey, just an FYI, we do retirement protection. QR code. Which QR code is this QR code broke, Jacob? It might be because, I told you this is old and hold on, I'm gonna scan this right now. No, it works. Might have been the other one because I think I took the other one down because it's kind of I think placating to people when you go, hey, watch a video on how to fill out a form that doesn't ask any difficult questions. It's not like we're doing um, algebra, geometry, or trigonometry. It's like, what's your name? If you can't figure that out, again, you probably didn't pass the insurance exam. So I cut that video, but this one does work. And again, if you just, I don't care what CRM you're using, this is the one we use. You should have a space in your CRM that sends your clients text messages or emails after you have them as clients. And you should be dropping information like sending them articles about retirement protection, sending them articles about tax-free retirement, the stuff we do here at the SRS Center, because it's a cheap, easy way to do it. And you never know when someone's getting ready to retire and they go, oh, wait a minute. I remember my agent, I just saw an email about this from my life insurance agent. Let me reach out to them. So it's super important to have a CRM. I don't like this is so out of whack to me. Didn't we already go through all this? So how to find SRS clients? Yes, make sure you ask the golden question. What do you have to act like life insurance, IRA, 401k, 403b, TSP? And then here's the magic. Follow it up with this question. If I could show you a way to take advantage of the upside of the market, but eliminate all downside risk, would that be something you'd be interested in learning about? Again, if I could show you a way to take advantage of the upside of the market, but eliminate all downside risk, would that be something you'd be interested in learning about? That's it. When you ask that way, I'm not going, would this be something you'd be interested in doing, something you'd be interested in just learning about? That's all. What harm does it do anybody? Ted, like, does it harm you to learn something you don't know today? Like, if I teach you something you have no idea about, are you in a better place tomorrow than you were today? Exactly. And it's not pushy, right? It's very like hands offish, sort of just, hey, can I throw you a bone? Like I'm going to help you if you're interested. So that's how I always asked it. And every now and again you get someone that goes, no, I got a guy. I love my guy. I'm like, okay, whatever. Move on to the next one. But you just it worst thing they're going to say is, no, I'm not interested. Okay, great. But you said it. And I also have had people call me back and go, hey, I do remember you saying like you could show me a way to not lose money, because essentially that's all that says is if I could show you a way to not lose money in the market but make money when it's doing well. Can you tell me what that means, or can you tell me what product that is? Because I sold insurance for 11, 12 years. So I sold insurance when the market was doing really well. And when people are making money in the market, they think they're invincible, like straight up think this is going to last forever. And it's funny because the market by history goes like this. But I'll be damned if the market's not doing well and people are like, oh no, I'm making way too much money, I'm good. And then when it starts to drop, they start to freak. So ask everybody and then make sure they know how to get a hold of you, because this will stick with people because it's talking about their money. If we could show you a way that take advantage of the upside of the market, eliminate all downside risks, you don't ever lose a dime. Would you be interested in learning about that? Pretty simple stuff. So when you find all that information, there's some Q&A. So if I ask Elise, like, hey, what do you have that acts like life insurance? She said, I got a 401k. If I could show you a way to take advantage of upside of market, eliminate downside risk. She goes, yes, I'd love to learn about that. I go, okay, great. How much I need some fact finding. So what do I go? I go, how much money do you have? Is it qualified or non-qualified? More than likely, they don't know what that means. So I go, is it like in a 401k, or is it pre-tax savings? Like, did your job, your employer take that money out of your paycheck before it went into your bank account? And if they say yes, then it's qualified. It means the government's qualified to take it. That's how I always remembered it. Government's qualified to take it, non-qualified, they're not qualified to touch my money, leave it alone. Right? What are your short-term, long-term goals? What do you want to do with this money? Tomorrow, 10 years from now, 30 years from now? Ask that way. Um, and then do they have a statement? If they have a statement, it just makes it a little bit easier for us, but we don't have to have one. I mean, best practices. So like the proper right way to do it. Yes, you should have a statement, but again, I've been doing this for 15 years, and we've moved hundreds of millions of dollars of money, and nobody's ever gotten in trouble for not having a statement. But if you can get it, get one. Can you please repeat qualified, non-qualified? Okay. Qualified money is money that has not been taxed yet. So like if Peggy works at Google and Google is paying her a paycheck every other week, and before they pay her, they calculate her hours or her salary, and they take a percentage of that money and put it into a 401k account for retirement, and they may match it, which comes off of her net money, right? So she's netting $2,500. 300 of that is going into a savings or her 401k. So now she's at 2,200 of taxable income. Non-qualified means you've gotten paid that 2,200 because that was what they deposit in your bank account, and then you take $200 and put it into an IRA, a savings account, a CD. That's non-qualified. Qualified means it needs to get taxed when you take it out. Non-qualified means it's already been taxed, so the government is not qualified to tax that money. Does that make sense? Did I explain that okay? Tiffany, can you give me a yay or nay in here? Because I do want people to understand that. And sometimes I speak fast. Yes, okay, good. And again, the easiest way for me to remember it was if it's qualified, that means the government's qualified to take it. And if it's not, they're not. And it made it simple for me to do that. Okay, so what do you do when you find money? If you go to Gateway, which is familyfirstlife.com, that's how you get into ILC. It's how you log in. Once you log in, Ask a Specialist is two from the bottom. Okay. This is no longer so so don't even look at this. Let me see if I can draw one here. I'm not even worried about it. Just go to Gateway right here. Everybody's got a Family First Life account. You get one when you become an agent. Hit the Ask a Specialist button, and then this will pop up. Dude, stop. You have Ask a Specialist for annuities. We have Ask a Specialist for IULs. We have Ask a Specialist for IBC. But IBC is a stretch for 99.9% of the people. And most people don't understand how it works. It just sounds good. Oh, be your own bank, infinite banking. Like, stop. You can't be your own bank if you're broke. I'm sorry, it doesn't work that way. So annuities and IULs are what Ask a Specialist is used most for. But if you have an IBC client, we do have IBC specialists that can help you. Just don't get disappointed when they go, this is an IBC plan, this is an IUL, or this should be an annuity, not an IBC. Again, all you got to do is fill out this form, and we will get someone in touch with you to help you. We have a few different options, okay? And we didn't have this when we started Family First Life. And I think if we had, we would have already be doing $1 billion in production because people are very intimidated. Who has not ever written an annuity? Can you raise your hand or drop a one in the comment? Okay. It's intimidating, right? It's intimidating when you haven't written one because you just don't know. And you don't want to be on the phone or in front of a client and look foolish. So I understand all that. So with the in-home assistance we added, you can essentially reach out to us and we'll partner you up with one of the best annuity closers at the company. And they'll run the illustration for you. They'll set up an appointment with you and your client. They'll pitch the thing. They'll write the app. They'll get it through suitability. They'll get the money transferred and they'll deliver the policy all while you get paid half of that. And all you do is go, hey, Frank, I got a client. Elise has got $200,000 in an old 401k and she's tired of losing money. Can you help me help her? I go, yup, got it. From that point on, they don't do a damn thing. I'm dealing with Elise. Now you're listening, you're learning, you're watching. I'm answering questions for you and her. I'm not answering your questions in front of her because that would be dumb. But after we hang up the phone, you got a million questions. I'm answering them. I'm walking you through the process from start to finish how to write an annuity. And it's priceless because once you learn how to write it, you can write a million of them. They're really not that complicated. In fact, to me, they're easier than writing an IUL. So that's option one is you can go, I don't know anything. I love somebody to walk it through so I know. And here's why I think it's really good because we know Elise gets the right service she needs. Because I'm not knowing what I'm doing, trying to figure it out along the way, and using Elise as a test dummy, like that. First of all, that's wrong, and second of all, you're probably not going to get it through. So you're not going to get paid at all. Whereas if you just had just let's take John Gavin pitch it and all that. We know it's the right product. We know he knows how to handle suitability. We knows he knows how to handle objections. He knows how to deliver the policy. So now instead of $200,000 401k, that would pay you $10,000 at the lowest comp, $5,000 instead of 10, but 5,000 is a lot more than zero. And I can't tell you how many times people are like, "Oh, I'm going to do it on my own." Why? Because I don't want to split. Okay. And then they call me back 2 weeks later. I'm like, "How'd it go?" They're like, "Yeah, it didn't go." I'm like, "Huh? I could have told you that." You know what I mean? So again, it's not for anything else other than to help y'all learn this. So don't look at it as I'm giving this up. Look at it as I'm getting this and I'm splitting this to learn. Like people spend 30, 40, 50 grand a year in college education. Someone don't want to spend 8 grand to learn how to write an annuity. Get out of here. Because I guarantee it, that top annuity producers make more than any college graduate people know. So that's option one. Option two is who's written 2 or 3 annuities, but not more? Raise your hand. Okay. At least you're in that category. Okay. You feel comfortable talking to clients. You know you can find the money. If you know what to do or what product to write, you can pitch it. You can handle the objections, all that good stuff. You're just going to get the product, right? That's just the I don't want any help. Just send it in. We'll send you the product. You're good to go. Or Elise might be in the 10% option where she feels like she might be good, but there are still some things she's not super comfortable with. She wants a phone a friend option, 24/7 emergency contact button, where client calls her on Friday night at 7:30 going, "Hey, I'm having some buyer's remorse. I don't know if I want to do this annuity." Elise can call me and go, "Hey, can you help me? This is what's going on." And if I need to hop on the phone with the client, even if I need to hop on the phone with the client while she's in the appointment, it's just, hey, I'm going to give you 10% to help me be my saving grace, if you will, or be my lifeline. That's two options. So you got the one. I just need the illustration. We'll send it to you. There's no you keep all the commissions, and then the other option is I'd like to have someone on as an emergency contact, and it's a 10% cut, like essentially for their time. And again, guys, it has nothing to do with the money. These guys are busy. The guys who write annuities and IULs and that are helping y'all do this, they're still in the field full time. So it's not like they're just sitting around waiting. They don't get paid unless they're selling. So when they're not selling, it costs them money. So that's why we did it like this to A, give y'all someone that you can truly watch that knows what they're doing, and B, make them want to help as well. Like, not everybody's built to just serve and not get anything in return. And I'm not saying these guys wouldn't do that, but it's not fair for us to ask them either. You know what I mean? So, those are your options. And then if you never want to write annuities, but you just want to find them and give them to us, we'll write them and close them and give you 10% referral fee, which is cool. I mean, you write enough annuities, 10% is can be a good amount. I think Dean made last year. I can tell you what Dean made last year. Give me a second. I mean, if you would have gotten 10% of what Dean did last year, you would have gotten $41,000 deposited in your account. Just 10. So, I mean, and our goal, the only reason we put that on there is we hope somebody does it and then they start getting deposits like, shit, this is 10%. What if I got 100% of this? You know what I mean? You got 100% of 41,000. That's $410,000 is what Dean put in his pocket. So, um, guys, it's pretty simple. This is again, I'm gonna open it up to some questions because I'm rolling pretty quick. But this is a simple explanation. Three things the market can do: it can go up, it can go down, it can stay the same. Peggy, if you could eliminate one of those options, which would it be? Peggy's gonna say it go down, obviously. So it's like, okay, I have a plan that does this. Are we good? Like, I don't need to go any further. They should be asking, I want that. How do I get that? You know what I mean? So again, the other drawing that you all saw in I use these in every annuity presentation. They were pretty simple. How do you get paid? I think I already told Joe, but $100,000 the average annuity we write here. So $100,000 annuity written, FFL starting annuity comp is five and a quarter. 100,000 times five and a quarter is 5,250 bucks. Pretty simple. You go up from there. Our top annuity contracts at 8% which is a pretty good jump. It's not a ton of levels like life insurance levels. It's not built that way. So if you're building a team and you're like, well, I don't really care about annuities because I don't get paid overrides, you're selfish and ignorant and rude. Sorry, I'm going to say it because these are great for agents. Like they're great for agents. They're great for their lead fund. They're great for their office fund. They're great for recruiting. They're great for their self esteem and self image. So like without annuity volume, I would not be sitting here talking to you today. 100% fact. Because I didn't love selling life insurance where I wanted to sell 7 days a week. I'm sorry. I had kids, I had a life, I had a wife. I didn't want to be in the field 7 days a week. I wanted to maximize my efforts when I was in the field, and annuities allowed me to do that. And they also bailed me out of more situations than I can even shake a stick at when I had a bad month, when I got hit with debt, when I had, you know, clients canceling. It just seemed like every time it was getting tight, an annuity would fund and I would get 8, 10, 12, 15, 20, 30 grand deposited in my account. I'd be like, thank God. So if you're building and you're not pushing your agents to learn this, you're really doing them a disservice. And I'm not trying to be rude and when I make fun of people that don't want to do that, it's factual. Like they can really help. And this is and I got these numbers for the people that are a little selfish deep down inside and y'all know who you are. I don't have one agent that works in my organization that writes annuities that has rolled me debt ever. Like ever. So use that for what you will. If you don't want to have debt, because that's the biggest fear of most people that are building this business is debt. You build this business the right way. You teach them how to sell IULs, annuities, mortgage protection, final expense, the whole kit and caboodle. They won't roll you debt because annuities don't let it just doesn't happen because they have money. So that's my spiel. I think we're done. SRS lift call, SRS liftoff call every Thursday at noon. So we do this the first Thursday of every month, and then in 20 minutes we'll hop on the SRS liftoff call. Today's the Q&A. 1 week's an annuity training, the next week's the SR or the IUL training, and then the third week is the Q&A, and it just goes in that rotation. And then the first Thursday of every month we do this annuity 101 training. Um, I don't know if this one works either. Again, this is really old. I just figured it'd be cool to look at it because I created this almost 2 years ago. Let's see if this one works. Oh no, this definitely doesn't work. Nope, don't look at that. I'm going back here, so don't people don't scan it. I will. We haven't used the slide in literally almost a year and a half, so I don't. I just wanted to pull it up again because I don't know. I don't know why. Anyway, I'm gonna open it up for questions. Let me stop sharing. All right, that was a lot. There's 72 people, and that's not too bad. not 1,000, but geez, we need to get this up. Does anybody, I'm going to do something I never do, but there's only 70 people in here, so I can manage it. Let me see. I'm going to allow you to unmute yourself if you have a question. Don't disappoint me, please. I know, right?
Hi, Frank.
And then
Snock here. That was a really good presentation. Did you hear me?
I can hear you loud and clear. What was your first name
Awesome.
again?
My first name is Knock, NGOC.
And you said like knock on the door.
Yeah, yeah, like knock
That's
knock.
dope. Okay.
Thank you. Yeah, so what is it? So I'm pretty much like I'm pivoting over to IULs and learning about annuities currently. So what would you say? What would be is there like different like process like as far as like having a discovery phase and then go request for help on the gateway for an annuity specialist to work with me through the deal, or how would that
Yeah.
process look like? The sales pipeline as far as
Yeah. And that's a great question because I didn't cover that. And most of what we do is a one call close. Like your mortgage
okay,
protection, your final expense, your IULs, you're trying your damnedest to one call close them. You should
okay,
never try to one call close an annuity. Like
yeah,
I don't think it's smart at all. Now
hmm,
when we were face to face, I did it all the time. Like I tried to because I didn't. First of all, I worked in Baltimore City, and some of the areas I worked in were less than desirable, and I didn't go anywhere without my gun. Like it was bad. So
oh
if I
wow,
didn't have to go some places, I didn't want to. So if I could close it all in one stop, I was good. But with an
hmm,
annuity, you definitely want to earn their trust, and you don't want to push them because again, you're virtual. They can hang up, they
hmm,
can get freaked out. There's a lot of scams people hear of that go on via the telephone. So when you find money, you're simply going to ask that question. If I could show you, knock, if I could show you a way to take advantage of the upside of the market, eliminate the downside risk, would that be something you'd be interested in learning about? And you go, yes. I go, okay, great. Is this a good time of day typically for you to chat? Let's say I'm talking to you at 11:42 in the morning. You go, yeah, I'm
okay,
usually free at 11:30 in the morning. Okay, great. Are you available? I go tomorrow or the next day. Are you available tomorrow at 11:30? If you go, no, I go the next day. I don't go any further out than 2 days because they're never going to be there. And then I
yeah,
just book another appointment and I go, all right, here's what's going to happen. I'm going to get some information together. I'm going to gather one of our retirement specialists
hmm,
and we're going to call you back and show you some different options and techniques you can use to protect your money.
gotcha,
That's
gotcha,
it. So you just book, we called
okay.
it BAMFAM, book a meeting from a meeting.
Gotcha. And then would you be qualified on in a sense on that call too, or would you just like ask that qualifying question and if they're interested, then sit down with a specialist?
Yeah, I mean, there's not really much qualifying on an annuity other than if they can
Mm-hmm.
move their money.
Mm-hmm.
So if they go, if I'm talking to someone that's in their 30s and they go, yeah, I've got a 401k, I go, are you still working at that company? And if they
Mm-hmm.
go, yes, I am, I go, okay, more than likely you probably can't move it. But here's what I need you to do. You need to find your plan administrator, the person that handles the 401ks at your company, because there's someone there called the plan administrator. And you need to
Mm-hmm.
ask them, can I do any in service distributions? That's it.
Gotcha.
And if they say yes, then we can look and see if there are any options for you. But
Mm-hmm.
unfortunately, these companies don't want you moving money in and out because it doesn't benefit them at all. And that's how I leave
Absolutely.
it. And
Yeah.
so the only qualifying question I'm asking them is to make sure that if they're interested, if I show them an illustration and they're over the moon and they want to move forward, can we actually get the money from where it's coming from? If they're above the
Okay.
age of 59 and a half, 60, I have no concerns really. So I'm moving on to the next. We'll do
Yeah.
all the qualifying, which is the suitability form, ask them about their financial situation. We'll do all that on the application. Um,
Yeah.
and if need be during the presentation, but it's really nothing you need to qualify them for like an IUL.
Gotcha. Thank you.
Yep. Anybody else?
Did you say that it was in-service distributions?
In-service distribution is what you can do is what it's called if they're below the age of 59 and a half and still employed at the company.
Okay,
And
thank
there's
you.
some other things like if you worked at a company that's a local company or even a huge company, let's just say Google again, and Google used T. Rowe Price for 20 years, and then they switched from having T. Rowe manage their 401k and went to Schwab, anything that they had saved with that account through T. Rowe before it switched to Schwab, they can move because the company changed something. They have that ability. So there's a lot of different ways. That's why I always tell people, hey, listen, bring them all to us. Even if you don't think you can, just bring them to us, and you may be right. But if you find someone and there's a situation like that, hell, you may just walk into two, three, $400,000 annuity, and you wouldn't have if you didn't just ask. You know what I mean?
May I
Let me
please
see.
get a link to this recorded call?
Yeah. So if you go, let me see if I can find it. Hold on one second. I'm gonna try and copy the link. If you go to YouTube and go to or just search up FFL National and then go to playlists, you'll see Annuity 101 training in there on a playlist. So we've got a few of them in there. This one have I'll have our people cut up and get out as soon as I can. But there are some ones that are already in there, and all of the SRS liftoff calls are in there too. So I'm going to try and share this with you. If you give me a second. Playlists, Annuity 101. I think this might work. See if that works. If not, just search again, Family First Life National, and then you can click on a link and you can open the playlists and see all of them. All right. Anybody have any other
I
questions?
do, Frank.
You're muted, Collie. Unmute yourself, honey.
I'm not, am I muted? You can't hear me?
Hello?
Everybody can hear me except for you, Frank.
Really? What is going on? I can hear you now.
All right. So does it make the thing that I get caught up on sometimes is somebody says they already have an annuity.
Yep.
Can we move an annuity to an, does it even make sense to move an annuity to another annuity?
Sometimes
Okay.
it does, sometimes it doesn't. And again, this is how I view this business period. Like, it's numbers. So if you got a life insurance policy and you've got 100 grand and you're paying $84 a month, if I can't show you more than 100 grand for less than $84 a month, it doesn't make sense unless you're trying to look for whole life permanent insurance. You know what I mean? It
Okay.
just has to make sense. So if I have an annuity, they could have a variable annuity, or they could have an income annuity, and they're not worried about the income. Because the two different types of annuities we write most are the cash annuity, which is essentially I just want my money to grow, or an income annuity. The income annuity doesn't grow the same way the cash annuity does. So it's two very different products. So if someone doesn't want the income, they should be in a cash annuity because they'll make more and have more money to leave as a legacy. So the answer is yes, you can. It just has to make sense. And then obviously you have the surrender charges and things like that.
Okay. All right. So then how would I ask that question to get them to want to get more information about that?
How would you ask
What
if
would be a good question to say, like, are you interested in seeing what?
so if they already have an annuity, how would I okay, I
Mm-hmm.
go, all right, Kali, how long ago did you do this annuity?
About 10 years ago.
Okay, cool. So a lot has changed in the last 10 years. Okay. Products are more aggressive, they pay more, there are more additions you can put on. There's more things that are automatically included, like living benefit riders and income doublers. I say things like that to get them peaked. I go, why don't we do this? Do you have a copy of your annuity?
Somewhere around here.
Somewhere, can you find it? If not, we can call the company. It's no big deal.
Okay. Yeah, I think I can find it.
Okay, let's see if we can look at something that does exactly what you have already, but better, and maybe make you more money over the next 10 years.
Okay. All right. That's
You know what I
good.
mean? You just want them you just trying to get them to understand. And listen, the annuities have definitely gotten better over the last 10 years. Everything always gets better the longer we're out. So we can definitely probably help them. They're probably not making as much money either later on down the road, because the annuity company probably lowered their caps and their participation rate. So they probably started out really good and then slowed down. So that would be my guess. So yeah, that would be how I would ask them.
Okay, thank you.
Thank you. All right, y'all. I'm gonna wrap this up because we got to go to the other call starting in 10 minutes. It's the Q&A. So if you have questions, just stay on and you can ask in the Q&A. I'm wondering if this is I can log in at the same time. Like if I go to SRS liftoff, are you all going to be in there? I wonder if that's going to be the case. This is how my mind works. It's like you guys look and go, this idiot makes money. Yeah, I do. It's crazy. What is, oh, and no, I don't want to end the meeting. Let me stop the recording.